Let's get more now from a guy who has his finger on the pulse of oil and gas spending in North America. Kevin Neveu, President and CEO of Precision Drilling. Kevin, it's great to see you. Thanks very much indeed for joining us.
Thanks for having me on, Andrew.
The analysts didn't see any great surprises in your latest numbers. I think what a lot of people want to know, though, is are you seeing any signs of a downturn in spending by the oil and gas companies with oil dropping below $70 US?
Andrew, not yet. And there's a couple of reasons for that. We do think that the capital discipline that the entire industry is working under right now, meaning we're not borrowing money to increase drilling, we're being quite responsible, keeping within cash flow, and returning capital to shareholders, has really kind of taken away that knee-jerk reaction to volatile commodity prices. Now, I do think they'll evaluate prices over the longer term, and if prices stay, below 60, there's some risk to oil drilling. If prices stay above 60, we're probably in a pretty good spot.
That's interesting, though. In the old days, though, they were more just Yahoo when prices were up and they'd overspend and then they'd have to cut back.
Yeah, certainly the days when the markets were rewarding rapid growth. Anytime the commodity prices went up, people would hit the gas pedal and begin growing. And then, of course, when things slowed down, they'd hit the brakes and slow things down. This is a much more mature, more disciplined business right now. And frankly, as a service company, it's working much better for us, too.
Now, one analyst telling us that your industry, the drilling services industry, has been guilty in the past of price cutting. I'm not saying necessarily you, but there can be destructive price cutting. But the industry, you and your competitors have avoided that this time around?
Well, it's not so much that we've avoided it. It's that the supply of the best rigs that are required for horizontal drilling is in Canada, it's pretty much sold out. So in Canada, between ourselves and the other industry participants that have the high-spec horizontal capable rigs, the supply is effectively zero, meaning the pricing is good and we're earning a return which is just better than our cost of capital, so we're happy with that. In the United States, there tends to be a few more excess super spec rigs, but it's still fairly tight supply, so the pricing has remained firm in kind of a moderate level, not a high level.
Right. So in the States, there's more overcapacity in the more sophisticated drilling rigs.
Well, there certainly is more capacity, and today there's probably excess capacity, but not by a lot.
Okay.
Probably less than 20% extra or additional capacity, and it's spread out in a number of different basins. So you can still have shortages. Like, for example, right now we're seeing increased activity in the Marcellus in Appalachian Basin in Northeast U.S., and there are no more rigs available. So we're having to move rigs back in, and the day rates are quite strong.
How do you move the big rigs around North America? Do you put them on trains, I guess? Trains are the way
No trucks, large heavy-duty oil field trucks. Big flat deck trucks, and to move a rig from Texas to Pennsylvania, it'll take about 70 truckloads to move an entire rig, including all of its accessories and component parts, and it could take about 5 or 6 days.
Wow, 70 biggish trucks needed to move just one rig. Yeah. Okay, I'm available as a driver if you need anyone. Yeah, I don't know.
I think those jobs are great jobs in the U.S. right now, and certainly there's a demand for drivers.
Yeah, that's right. I don't know if I'd have the concentration. I admire those guys hour after hour. Talk to us about North Dakota. You're doing something of a pullback in North Dakota?
Yeah, we are. We operate in a small well service business, much like our big well service business in Canada. But we were down there really servicing the Canadian operators who were operating in North Dakota. Most of those companies have sold those assets off to U.S. operators now. A lot of small mom and pop service companies we compete with, and it's just too price sensitive. So we're moving the best rigs back to Canada, selling some of the assets off. The market in Canada remains quite strong. We'll use those rigs in Canada and make better returns.
Are you seeing good growth in gas because people are optimistic about LNG?
Yeah, gas looks really good kind of across North America, especially in BC and Alberta right now, with LNG Canada really imminently going to be beginning their first shipments, they say by mid-year, which is just really a few weeks away. So we're quite excited about that. It's been driving strong rig demand for us in the Montney and Duvernay and Deep Basin. And that's those big super spec rigs that are digitally controlled with automation. It's been really good business for us, and we've been doing a great job for our customers. But even in the U.S. now, in the Haynesville, which is western Louisiana, eastern Texas, with about 17 BCF per day of LNG export capacity due to come on in the next 18 months in the U.S., We're seeing rising interest in the Haynesville, and expect that some of our 9 or 10 rigs that are idle will be activated in the next few weeks and next few months, and that should be a good market for us, really, over the next several years. We're quite excited about that.
How much new export gas is coming online, and how much would the US roughly be exporting now, Kevin, if you have those numbers?
Yeah, I think the U.S. exports it's the largest gas exporter in the world. I think it's around 12 BCF per day. So this is going to more than double the export capacity in the U.S. And of course, Canada exports a bit of gas by pipeline, but none by LNG. And the LNG Canada terminal, which is about 1.4 BCF per day to start, and then rising up from there, that should be online, we think, by mid-June, and ramping up to full capacity by the end of the year. So these are all, I think, really important projects to help decarbonize the world, displacing coal in other markets, and utilizing North American resources, Canadian resources, to a real advantage for exports.
Kevin, you are cutting back your capex this year modestly by about 25 million. Why is that?
Yeah, a couple of things, Andrew. We had a kind of a placeholder for growth capex where we thought we might do some upgrades, and there was nothing specifically identified, but we had that in our budget. We've taken that out. We could add it back in later if we see good opportunities, but in the meantime, we've taken it out. So we've taken 8 million out for potential projects we didn't have identified. The bigger number is 17 million reduction, which is what we normally would spend for maintenance on the rigs. And typically every year, around the end of the year, a lot of the manufacturers we buy from will offer end-of-year sales on drill pipe or end-of-year deals on equipment. We often take advantage of that, and we've done that in 2023, 2024. We decided to budget it in this year, and just with the market uncertainty, we've decided to remove that from the budget. That helps match our budget better with market expectations, which we think we've done. And if things turn out better than we think, then likely capital spending goes up.
Kevin, we better leave it there. Thank you very much indeed for joining us.
Thank you, Andrew.
Kevin Neveu, President and CEO of Precision Drilling. Let's switch to gold.